Hello, everyone. Thanks for joining and welcome back to Wall Street Bullion. Our guest today is Brian Beamish. He has been in the gold and silver space for over 30 years, and he's also a former commodities broker. How have you been, Brian?
Oh, good, good. Can't complain. And
Yeah.
as an old broker, I would say, besides when I do, nobody listens.
Well, I want to thank you so much for coming down. I know we have a presentation today for the viewers. It's going to be a really quality one that you're going to go through with us. If you want to start sharing your screen right now, and we can start from the top, shoot away and go through this presentation. And yeah, I'd love to see what you have for us and the viewers today.
Okay. I am under a little bit of the weather here, a bit of a cold bug running around Vancouver. So if I cough or hack or something, my apologies ahead of time.
No worries.
I think we're screen sharing. You can all see the money printers go burr.
Yeah, yeah. You have to share it right now. So if you can share it
Okay,
right
I'm
now.
not sharing yet.
No, no, not sharing yet.
There we go. And
There we
now
go.
we can see the money printers go burr.
Now we can see it.
All right. So, unfortunately, this is really the backdrop of the entire conversation. And unfortunately, it's sort of the state of the world right now. Um, these are the central banks, these are the money printers. This is the inflation. If anybody wanted to pinpoint exactly what inflation is, Milton Friedman, famous economist, just basically said inflation is a monetary phenomena.
Hmm.
And frankly speaking, I am a subscriber to Mr. Friedman's newsletter. So I like this approach to the market. And if you look at it from this approach and put away all the nonsense that the politicians throw at us and just listen to the market, actually, the whole world basically makes sense.
Hmm.
Um, so, would it make sense that a base metal, even precious metals, would be appreciating in price given dollar terms, given the fact that they are printing money like it's going out of style? Yes, it's just common sense. But sadly, too, at the same time, too, it explains why a loaf of bread at the grocery store is going up, the dozen eggs. Are you here in Canada?
Yeah, I'm here in Canada, Edmonton,
Right.
Alberta.
So you're very familiar with the hyperinflation at the grocery store.
Oh yeah, that's crazy.
But the bottom line here is it has nothing to do with wars in Ukraine or sicknesses, and it has everything to do with what you see on the screen. And
The money printing.
unfortunately, this basically plays right into the bank cartel, the international cartel that basically controls the international banking system. This plays right into their hands. So
Right.
that's the backdrop that we're dealing with. That's the world that we live in. So, with that said, the banking cartel basically took over, the Western civilization pretty much with the inception of the U.S. Federal Reserve Board in 1913. And since that time period, you can actually see they have our society on a very predictable path where the society must grow. Why?
Hmm.
Because we base our monetary system on debt. And you can only float so much debt before that debt becomes unserviceable.
Hmm.
So, how do you get your way out of this problem of a never ending debt situation and it constantly growing and politicians continually making promises that can't really keep? The simple solution is you just monetize the debt. You've probably heard that expression.
Yeah,
And,
absolutely.
if you understand that backdrop, then you understand why this market just keeps going up, up only market. In that, every single generation, the monetary system gets reset and we play the whole game over again, over and over and over. It's the same thing. We just add another zero onto the end of the price tag.
Wow.
So the question ultimately is, where are we on this cycle? This is the generation that fought the Second World War. We call it the greatest generation. This is the baby boomer generation going through their growth cycle, or what I like to call their greed cycle. So the question ultimately is our next demographic is the millennials, and what is their growth cycle going to look like? I've overlaid both the baby boomers and the greatest generation on here. And what's fascinating is if I actually zoom in closely on that path, you see this is the Dow Jones Industrial Average. You can see that we're basically following along that growth plan. In
Right.
essence, the irony of all of this is there's actually not a heck of a lot new going on here. The question ultimately here was going to be, do we have that absolutely insane face rip growth that the baby boomers enjoyed, or do we have a more tempered growth that the greatest generation enjoyed, if you will?
Right.
I think that we're more along the greatest generation in that the money cycle itself, which I don't have a graphic of here, basically it resets once every 80 years. And of course, we had Bretton Woods back here, and that actually is this image where this was the Roaring 20s, the Great Depression. And ironically enough, if you take the money printing out of the equation, you actually see that, yeah, well, that decade from, or I guess that 20-year period from the peak of the dot-com boom to where we are even today, asset prices have not even achieved those lofty levels that we saw through the dot-com boom.
Right.
So actually, this is pretty much right on cue. They've gone and hyperinflated the money supply, added another zero onto the end of all prices. So my hunch is that basically the world equity markets, once we get through this transition phase of sort of ramming this great reset thing that Klaus likes to tease us about, once we get through this repricing event, you're probably going to find that the stock market actually enjoys a fairly sort of, let's call it the wind at their backs, as the millennials sort of get into their sort of peak earnings years and work their way through their life cycle. This is
Right.
basically my expectation for the stock market going forward.
Wow. Okay.
So I expect some serious growth in price. You really should. And I don't think a lot of people appreciate that. And again, that sort of comes back to what does this cycle into the millennials sort of peak? Here's the dot-com boom. That was the baby boomer sort of generational peak. So what does this peak actually look like?
Right.
I think in the near term, unfortunately, well, fortunately, unfortunately, whichever way you look at it,
Mm-hmm.
we're getting close to the end of whatever this up move is here in the equity markets.
Yeah.
And actually, if you go back and look in history, there was actually a really nasty shock to the monetary system. You probably heard of Bretton Woods.
Oh yeah.
And in essence, that was that generation's great reset, where basically the definition of money had to be sort of reinvented. And unfortunately, I do believe that that is coming in our not too distant future.
Wow.
It's one reason why you see the gold market acting the way that it is right now. It's getting ready for that event.
For a Bretton Woods
Um,
2.0.
Pardon me?
For like a Bretton Woods 2.0.
Well, whatever it is, and who knows? I mean, the worst part about I always tell people is don't get into the business of predicting the future, because
Yeah.
I guarantee you, whatever the future is, it's going to be more outlandish, more crazy, more over the top than anything you and I could possibly dream up.
Wow.
That's just the way life is.
Yeah.
So I don't know what the shock is, but my hunch is, and actually, I'm starting to hear a lot of sort of smarter people in the marketplace start to say that, this AI bubble that we're enjoying right now, it's not sustainable. Some of the growth numbers that they're expecting now to sustain this continue insane up move, they're just not realistic. We're talking like trillions of dollars of growth. And okay, maybe over 10, 15 years, but over the next few years, that's not very likely.
No, absolutely.
So you can kind of feel the bubble to a certain degree is inflating. Interestingly enough, this was supposed to be a crypto cycle peak, but I actually think that this sort of move into assets that are proxies for non-confidence in the system, i.e., gold. I think that's actually the hot spot of the market right now. Uranium also too, super hot. And interestingly enough, I used to be a VSE broker,
Mm-hmm.
and geez, after 2006, 2007, 2008, you couldn't give away VSE stock. And it's actually interesting to see the VSE market is actually starting to come back to life. So that's an encouraging sign.
Okay.
And it also means that we're sort of setting the base for whatever this growth cycle is going to look like. And Yeah, let's keep moving through because we only got about a half an hour, right? So we
Yeah,
got to
yeah,
keep
that's right.
moving through this.
No, it's
Point of the
fantastic so
matter here.
far.
I'm sorry.
It's fantastic so far, everything
All
you're
right. So the
explaining to
point of
us.
the matter here is, and this rally off of the spring lows, it sure caught a lot of people off guard, but actually it wasn't too unpredicted. The problem here, though, is I do hear a lot of chatter about somewhere in 2026. I don't know whether you're familiar with the Benner cycle,
No.
but Mr. Benner lived a couple hundred years ago, predicted cycles very, very accurately. One of his cycle pivots is in 26 here. And as you see on the screen here, I've actually overlaid the Bitcoin halvening cycle, and
Okay.
almost every 1.382, which is a fib time reference. Don't worry too much about that. But just notice 1.382, 1.382, 1.382, 1.382, peak, peak, peak. So actually, the
2026 is,
Bitcoin
yeah.
halvening cycle actually aligns very, very nicely with this thinking that we're probably into some sort of peak in 26. Usually the stock market's relatively happy into the spring, but once we get through that, there's some sort of shock that's going to hit us, and who knows what the hell it's going to be. And we won't actually bottom until probably the latter part of 2027.
Wow.
We actually maybe starting to see the light out of the end of the tunnel, but 2028 is all supposed to be a bad year too. So that's unfortunately our future, which sucks, but
Mm.
you might as well call a spade a spade. So what are some of the backdrops? Like there is the Bitcoin halvening cycle. And I don't think it's an accident that this cycle is exactly the way it is. If we actually look at the cost of money, you notice I've put the Bitcoin halvening cycles on here as well. And we
Yeah.
see that the cost of money actually moves in a very predictable 4-year sine wave. Again, don't think it's an accident that Bitcoin has the halvening cycle the way that it does. And unfortunately, you can see as it stands right now, we are in a relatively friendly part of that sine wave. And when the Fed is lowering interest rates, this is usually a sign that the economy must grow. The people in charge are starting to see that maybe growth is starting to come into question a little bit.
Mm-hmm.
And so they need to stimulate, stimulate, stimulate. And another reason why gold is going crazy right now. So
Wow.
the wind is at the market's back here until we get through this cycle pivot. But once we get through this cycle pivot, I mean, I don't know whether you felt the pain of that last rising interest rate cycle, but I think this actually caught a lot of people off guard, and they just weren't expecting it. In fact, actually, some banks even went bankrupt through all this. I don't know whether you remember that or not.
Hello, my fellow silver and gold stackers. Please hit the like and subscribe button. It will really help the silver and gold community grow. It'll help this channel grow, and I'd really appreciate it. Back to the video. Yeah, I do. Yeah. Do you
So
recommend, Brian, as we reach into 2026, as going into like the peak year, do you recommend people to take some profits off the table for the stock market and then wait a bit until it hits the bottom, or what are your thoughts there?
Well, I think it's a good idea to always play from a position of strength.
Okay.
But and so if that means that you're up a huge amount of money, obviously there's tax implications involved with that. Is it in a registered account? Is it outside? What is your capital gains rate? I mean, those are all going to be serious questions. And frankly speaking, all of your audience should consult a professional tax advisor on that. With regard to actual price itself, I actually approach the market from a slightly different perspective in that everything that I do is mechanically driven. So if I buy an asset, the very first rule that I have is that if the asset doubles in price, I sell half.
Right. Yeah, that's a
There's
great way to
no
do it.
choice, right? That just you lock in that profit. And usually the sales are at like 2 times, 3 times, 4 times. So then that way I get all my original capital back in my hands. Whatever I still have invested in the market is the market's money. It's not my
Yeah.
money. I have
Yeah.
no risk.
Yeah.
And if you can sell half at like a triple or two and a half, whatever, then you even got some money to pay the tax man so that they're happy.
Yeah.
And then once you're in that position of having that, what do we call a risk-free position, then I don't really care what happens to the rest of it. But at
Yeah.
the same time, too, if the asset doubles again in price, then another half goes out.
Yeah.
So my selling, I'm forced to act. I have no choice. So my answer to you is in the past 2 weeks, I booked more than 11 doubles. And
Wow.
some of them were triples and a couple of them were quadruples just because I looked at my portfolio and a lot of assets have moved up a lot. And it's time to start harvesting. They don't call it the fall for nothing. So,
So you were forced to take, half your profits.
I'm out there harvesting and
Yeah.
harvesting like crazy. And some assets have actually even got to the point where they've doubled from the double level. So I'm actually getting ready to sell some more.
Right.
And what I tell people, I have, on my Twitter feed, I have a little banging out doubles hashtag. And every time I book a double, I put on my little Twitter feed, banging out doubles. So,
Nice.
this happened to be a copper stock that I bought a while ago, doubled in price, out goes half.
Take out
This is
half.
a
Yeah.
capstone copper. And you can imagine, do you think I've taken a bit of profits in the metals these days?
Oh, for sure. Absolutely.
Some of these, and the interesting thing is, I mean, technically you could argue uranium is a metal, but some people argue that it's more energy play. But anyway, whether it be uranium, whether it be copper, whether it be crypto, I mean, just absolutely killing it on crypto. The point here is these markets are moving up into the anticipated cycle peak, and I'm paying myself. That's what I have to do.
Yeah.
I am here running my small business of trading, and I have the expectation that this business is profitable. So when the market affords me the opportunity to pay myself for my efforts, and SHOD stands for sell half on a double, I do so. Right?
Wow.
That's
Yeah. Fantastic.
how I run my
It's
business.
really great. I love it.
So it doesn't matter. And the interesting thing is, it's pretty broad based. Lots of crypto names selling, taking profits. This was a triple. More nuclear names, designer nuclear companies, huge wins. More nukes, metal stocks. This was a tech stock. I mean, here's a gold play. This was actually a SPAC from last cycle. But the point being, market's moving up. You see what the gold price is doing, right? And your whole audience. And I am ringing the register. I'm getting paid for my efforts investing at the bottom of markets.
Mm-hmm.
So, all right, back to our presentation. Let's see if I can wind this up pretty soon. So the point of the matter here is that we can all see that the cycle is coming to some sort of apex here.
Yeah.
I don't think it pivots until about middle of 26, but there are some warning signs. And one of the big topics du jour is this concept of liquidity.
Mm-hmm.
And what I noticed, and this is basically the Federal Reserve's balance sheet, and this is basically liquidity. So when the dark blue line, that is their liquidity, when they are pumping liquidity into the system, you notice things like Bitcoin start going up in price. The stocks start going up in price.
And that was COVID, the 2021, that big lineup.
Yeah, this would be the COVID scare. In fact, this was an interesting scenario because this is basically right here. The credit markets actually seized up, and this was the Jerry and his bazooka. I don't know whether you remember that quote back in March of 20 when the whole market was seizing up. And there
Hmm.
was a US politician that came out and said, I will sacrifice my life to save capitalism. I don't know if you remember that. I mean,
No.
the humans just, they get so screwy through this stuff, right? So anyway, the point of the matter here is they stepped in earnest. And I actually had students of mine who actually bought this Bitcoin bottom, this dip. It's actually a setup that we teach, or I teach. And you can see what the stock market did. As soon as the Fed started to pump liquidity into the system, stock market bottomed and just literally cranked higher. We had actually a little bit of a credit scare here. It didn't really spook the market too much because the Fed came back in and said, we'll give you lots of liquidity, no problem. What I
Hmm.
really want you to see here, though, is look at these rolling tops. So this was the rolling top. There's the Bitcoin cycle peak. There's this stock market cycle peak. And notice the bottom in the stock market and the bottom in Bitcoin. And that was right through basically them tightening, taking liquidity out. And then finally they stopped. And you might even argue through this window, this was when Trump was first presidency. He was barking about how the Fed had rates too high and there was just no liquidity in the market. And ironically enough, he was right. So, but the point here is when you see these rolling tops, this is the banksters taking liquidity out of the system.
Wow.
So, regardless of interest rate policy, regardless of what politicians say, this is really important because the banks, remember our first conversation about how they took over our society, back in 1913. We are basically at the mercy of these banksters. So, notice here, this was when the inflation problem got going. And then Jerome Powell came out and said, yes, okay, we'll get serious about inflation. They took liquidity out of the system, and you can see there's your Bitcoin top in 21 and its subsequent break, and there's the stock market break. Then they
Yeah.
come back in, say, all right, you can have liquidity again. Bitcoin bottoms, stock market bottoms, up we go. But notice what's happening right now.
Oh, they're taking money out the system.
Right. So that this is like the canary in the coal mine. This is the writing is on the walls. There is a problem with the system right now. Now, unfortunately, we humans, right, we can sometimes act illogically in the face of data that is clearly telling us we better be careful here. So the party is in the latter stages of the way that I describe this to my students is it's about 1:30 in the morning. The music's still pumping. Everybody's having a great old time. And there's Brian looking out the window going, oh, geez, is the old lady across the street calling the cops? Oh, boy.
Right. The party's going to end shortly.
Right. But everybody at the party is right in the middle of it. And the
Yeah.
last thing they want to hear is, oh, Beamish, shut up. But I'm the guy going, you got to work tomorrow morning. You want to have maybe a glass of water or, maybe take an aspirin before you go to bed, right?
Right, right.
I'm the party pooper. And unfortunately, the writing is on the walls. It's been a great move. Don't get me wrong. And I've made a lot of money in this market. But unfortunately, and I got to say, bring it all full circle. I started in Bitcoin back here. So I've ridden this whole cycle. And I got to tell you, this time fib cycle, based on the 4-year halving event, I do not think that this is an accident. I actually think that it was done on purpose because this matches the 4-year money cycle that I've been sort of barking at you about very, very closely.
Wow.
So with all that said, that's the backdrop. Okay. We know we're in the blow off phase of the market. So let's go look at your beloved assets. And of course, what's the theme of the current market, right? They are calling this the rebasement trade now. Hey, have you heard that expression?
No.
All right. Well, you learned something new today. The point here is that this is like the gold and silver stocks. And I always think that the gold and silver stocks actually lead the commodity.
Mm-hmm.
What a surprise that sort of your monetary based proxies are all going absolutely crazy here. And the interesting thing about this gold silver index is you can still see this is a pretty big technical objective up here. This is just a very simple harmonic A, B, C, D pattern.
Mm-hmm.
Don't be too worried about that. But the point is that we actually have a confluence of some levels coming up here. We have a trend line from previous cycle peaks. We have not only this high to high trend line, but we have a massive, and have to go even further out for you to see this, a massive trend channel that goes back to the start of time that also intersects up here. And we have a couple chaos theory levels along with this harmonic objective. So I still think there's a little bit more in the tank for gold and silver stocks. And interestingly enough, just even today, I won't go into it, but Newmont broke out to new high, the biggest gold stock in the world. So if that thing's powering to new 52-week highs, I don't see this stopping anytime soon. So there's still some room to go here. We're at 318. I like maybe a stab up into the sort of maybe high 300s, maybe 350 as a big psychological level. But, this is a 2-week chart. This could go chung, 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 chung all the way into the end of the year.
Mm-hmm.
I wouldn't see anything wrong with it. And also, too, what's scary is that someone point blank asked JP the other day his comment about the gold price. And the gold will stop moving up when the authorities, the higher ups, start saying, yeah, that gold price is getting a bit concerning.
Right.
And what did he say when asked about the gold price? He's like, I don't have any comment about asset prices. As
Really?
soon as the market heard that, gold just took off like a rocket and pounded to a new high. So I think there's a hell of a lot more to go in this gold stock market. And interestingly enough, if we look at the gold stock market in that fiat terms, this is an interesting chart. We are coming up against a resistance level. And actually, a week or so ago, we were going to have this conversation. And I was going to point out that we're probably coming into a little bit of an inflection point on the monetarily adjusted number.
Okay.
For me to become longer term bullish here of this space, though, I need to see the market break this trend line. And this trend line goes back forever. That's actually off of the original peak from back in the 1980s. So this is a pretty important trend line here. For me to be thinking that this is a new move higher, I actually have to see this market break this trend line, put in some sort of bullish structure, and then accept higher. I think probably what happens here in the near term is we will play with this trend line. We'll probably blast through it. And like I said, based on the regular indexes, there's still a little bit more room to get up into these big. There's like a cluster of 5 levels up here that really should be hit.
Okay.
But once this is hit, this unfortunately becomes the trap, because I guarantee you at this point, everybody and their brother is going to be saying, buy gold stocks, you'll get rich. It's the easiest money you'll ever make, blah, 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 blah. But quite often, I've actually seen markets even walk down these trend lines from the other side. So for us to know that we have another leg higher here in the gold market going forward, we need to see a break of this trend line and then a consolidation on the other side of it and an acceptance above.
Wow.
If we look at gold itself, same sort of logic. If we look at just the non-diluted proxy, just the gold price, I think we have a pretty well-defined bull flag working here, pennant, if you will, which actually paints an objective up around 45, 4,600. So sitting right now, 42 and change. There's probably a few $100 to go here. I could actually see by the end of whatever this move is, keep in mind, there's the end of the year. So somewhere through this, I actually could very realistically see a stab up into $5,000 an ounce. That wouldn't surprise me.
Wow.
Having said that, can I come in on the buy side here? No, there's no way in hell I can buy that there.
No.
My hunch is there's a top somewhere up in this area, and there's our Bitcoin 1.382 cycle. I don't think
Wow.
that's an accident at
Wow.
all.
Wow. That's crazy.
So, somewhere up in here, there is some sort of near term peak. I just conjectured here because I do believe that the stock market will peak in the spring of this coming year. I don't know where it is. Do we have any sell signals here anywhere in sight?
No.
Not at all. Nowhere in sight. So this thing's finding its top. It is going to top somewhere up in here. The top is not here today. Just got to let it just do its thing. And we are way, way too late to be buyers.
Oh yeah, absolutely. From what I see here, now is just a time to. And what if it hits its peak and then it starts correcting, but then it makes that base level and then it takes off again? Would you still buy in that base level there?
Well, maybe let's take a look at our monetary adjusted story. And this is interesting because I showed you this before. And the question really here, this is the monetarily adjusted number. So there is the gold price back in 1980 and those old, remember that crazy ass picture that I showed you? This crap.
Yeah.
So this is the image back when money actually was worth something. So you tell me, based on the monetary expansion, are gold prices actually really very high right now?
No.
Relatively speaking, are we at the top end of the range?
No.
No. And, I'm a member of the National Association of W Lovers. I don't know whether you've ever seen that
No.
from any of my tweets, but, basically, I like W's.
Oh yeah, yeah, that makes sense.
Hopefully, you can see, oh
I
my
could see the
goodness,
W. Yeah,
what
yeah.
the hell is going on there?
Right.
So if this thing actually breaks out now, I think the near term target is this high. So I think that's what they're going after here in the near term. And remember, we did our little bull flag on the regular non manipulated. Well, I guess this is the non manipulated price. This is the manipulated price, $4,200 an ounce. God, I remember when you couldn't give gold away at $250 an ounce through Bre-X. You ever heard of Bre-X?
No.
I was a broker through Bre-X. Maybe go Google Bre-X after we're done. And anyway, the point here is I think that this is actually a very significant technical objective. We have Foggenbaums up here. Obviously, this is a massive horizontal support and resistance area. Wicks and tails like to be eaten, blah, 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 blah. And there's our little bull flag that's also painting up into this area. So
Oh.
I think the near term objective is we want to hear out of the gold bugs. You guys getting all excited about how gold's broken the monetarily adjusted 2011 level. This is the buy. Got to get in there, buy. And that's the day that I sell.
Brian, sorry to cut you off. We only have about 59 seconds left. Can you show
no!
people?
See, I knew this was going to happen.
Can you show people your social media so people can connect with you quick and your Substack? Because I want people to follow your work. This is tremendous amount of knowledge for everyone to follow. Like it really gives insight. But please show your Twitter.
We haven't even gotten to silver yet.
I know. We might have to do a part two. We have to do a part two.
Oh man! So you're gonna have me back, and then of course I've got a whole bunch of fun picks I was gonna tout to you guys. But oh well, I guess we'll have to do that another day.
Show us your social media.
All right, so you can find me on Twitter here with the handle CR Investor. That stands for the Canadian Rational Investor. I've been on there a little while, I think since 2009, a couple followers. I don't shill anything. The only reason why these people follow me is I think I give pretty good advice. Well, not financial advice, right? But basically, my opinion.
Right. If they want to follow your work. If you want
to see what kind of job I do as a trader, just do the search hashtag banging out doubles, and you'll see all of the winning trades that I've had over the past 20 years, and there have been bazillions of them. So I just basically do the same thing over and over and over. If you want to follow me individually, I do have a Substack. It's at Trading with Brian, substack.com/@Trading with Brian. And actually, I post quite a few of my winning trades over here as well with the Twitter links, as well as I can do lengthy write ups. There's the International Association of W Lovers reference I was making earlier. And ironically enough, about a month or so ago, I told people that this was the most wonderful part of the money cycle to make lots of money. And as I said, and every time I banged out a double, I put in case in point, and it was just post after post after post after
Wow.
post. After a while, I just was like, screw it. Just here are all the fills, because it was just insane how many fills we were getting.
Wow, that's awesome. Well,
So you can find me over on Substack Trading with Brian as well. So.
Welcome to the Cayman Islands, a premier offshore jurisdiction where natural beauty meets financial stability. Here, your wealth is more than secure. It thrives in one of the most trusted and respected financial centers in the world. For over a decade, SWP has been the trusted choice for precious metal investors worldwide. Our purpose-built 6,000 square foot facility sets a new standard in precious metals storage. We are proud to be one of the only vault operators approved by the London Bullion Market Association. Beyond safeguarding your assets, we're committed to making a difference in our community by supporting local causes and events that reflect our values. As we continue to expand and innovate our services, we ensure that your wealth is safe and strategically positioned to shield you from the uncertainties that lie ahead. Strategic wealth preservation, trusted today and ready for tomorrow.
Absolutely. Well, Brian, I want to thank you so much for coming down and speaking to the precious metals community. What a wealth of knowledge we've had today here in your presentation. I'd love
And
to.
we didn't even get started.
I know we got to do a part
show you.
two. You know what? We are absolutely gonna do a part two, so that way we can do a deep dive into silver as well.
Yeah. Well,
Yeah.
and you know what's a hot market right now? Oh, maybe
Platinum, platinum.
I'm not going to tell you.
Yeah, don't tell me. You
You're
keep
going to have me back.
All right. You know what? Everyone watching this, highly recommend you go follow Brian's work on X. Follow his Substack. I really highly recommend it because what a valuable wealth of knowledge we just went
And
through
it's
today.
free. The Substack is free. The Twitter is free. So there's
Yeah.
no obligation. Not
Yeah.
trying to sell you anything. In fact, what I tell people is the only purpose I have here is to try and make a positive difference in this world. I know
Yeah.
that sounds cheesy, probably sounds very Canadian, but
It does sound very Canadian. Well,
so,
thank you so much, Brian, and everyone watching this. Please hit the like and subscribe button. Follow Brian's work. It'll be in the description and the links below. Brian, I'd love to have you back on for a part two very soon here. So we'll talk to you soon.
all right. Thank you, Ivan. Bye now.